I'm Arvind Chari. I'm the Chief Investment Officer at Q India UK, an affiliate of Quantum Advisors Private Limited, which is also the sponsor for Quantum Mutual Fund. As always, I'll be speaking to you on what we see on the Indian markets, on Indian currency, on Indian flows, how are foreigners reacting and responding to what is happening in the markets, and maybe try and give you an outlook. So June and of course now in July has again seen a continued rally in the equity markets. It's been a very significant move up across all indices, and especially in the small and mid cap space. If I look at from India as against, as I've been talking to you about India against emerging markets or India against the world index, whatever underperformance India had till about March 2023 on a year basis or on a 6 monthly basis has now completely been erased. So if you look at any time period between 1 month, 3 month, YTD, 6 month or 1 year, India is very significantly now outperforming the emerging markets. Of course, India continues to lag NASDAQ and Europe, but this has been a very good turnaround in market returns and in India's performance. We have been guiding about the fact that we see a continued cyclical economic recovery, and that earnings will catch up to what the recovery is in the market. So we have seen some of that, but a lot of the recent last 3 month movement in the upwards in the stock markets have also been driven by flows, and within flows it's been driven mostly by foreign flows. So if you recollect, 21 and 22, we've seen a reasonably large outflow by foreign investors from Indian markets, but they seem to have come back quite dramatically especially in the last 3 months. So if I look at YTD FPI buying in the equity markets, it's about $12 billion, but there was a large outflow in the first 2 months. So if I look at since March till last week in July, foreigners have bought about $15 billion in net equity. That's a fairly large amount of buying in a small period of time, and that kind of shows up in how the markets have responded and performed over the last 3 months. We are seeing some what we call India dedicated flows, which means flows coming into India dedicated mandates or India dedicated funds. It still seems to be a mix of what we call passive flows, which is flowing into ETFs, and some into actively managed flows. So that's a good sign to see after a long period of time, India dedicated funds are getting flows. Maybe is it return chasing or it is long-term dedicated flows? We'll have to still wait and see how that pans out. But as of now, the trend seems to be that, apart from normal flows from global emerging markets funds or global funds coming back into the Indian market, it is also flows into India dedicated either ETFs or active funds. That has also resulted in a very huge rally, as I said, in some small caps. Some may be without basis, so one really needs to be careful in terms of this. It just seems to be a lot of momentum going into mid cap and small cap space. Some could be backed by earnings, but many just seem to be a liquidity driven, momentum driven upsides, and so you need to be careful. Overall, also we do see that how we think about our portfolio upsides that have clearly reduced. Many stocks are getting very close to their fair value. We still see earning upgrades and we still see the economic recovery, but what upsides we saw in the portfolio, say in Feb and March, those have already, quite a bit of that has already come about given the rally that we have seen. The other thing that could be drawing inflows could be this entire trend towards dollar depreciation. So dollar has fallen quite a bit, and one way to play that is of course to buy emerging markets and buy countries like India. So any asset class in emerging markets or countries, when you buy that and you get benefited if the dollar depreciates against that emerging market currency, and that seems to have happened in India also. Although the Indian rupee has not appreciated by much, the RBI seems to be fairly active in protecting the appreciation and building up the FX reserves. As they say, build up the FX reserves in good time, and then you can use it when the cycle turns or when money goes out. So other emerging market countries have seen slightly larger appreciation of the currency, but in India, the RBI seems to be managing it. So the rupee's been fairly stable to the dollar, just above the 82 level mark. On the bond market also, we see fairly range bound movements. There may be some food inflation worry. You've seen tomato prices in India going up a lot, and that will have a bearing on how the inflation prints come about. But we don't see any RBI action. RBI won't be reacting to that. I think they will remain at the pause that they have maintained in the repo rate, and bond yields and interest rates should be fairly range bound. You still need to watch the monsoon, how the monsoon plays out. We've had a spell of rain, but it is still spatially not that well distributed. Food acreage and crop production is not come back to a level where you would want it to be in mid of July. So we'll have to see that. Maybe if monsoon fades out a little bit, you will see some food inflation worries coming up. So you need to be watchful about that. But overall, we don't see a very big change in interest rates or change in the currency. With that, I'll come back and speak to you next month sometime at the same time to talk to you in more detail about how the markets and how the returns have performed. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.